how I invested $1,000. And let me tell you, I have no regrets. 0.5% return on my best savings account was not doing it for me. We are at the end of September 2020. The pandemic is still going strong. We have promises of a vaccine, but will it happen? Will it have side effects? How effective will that vaccine be? 30% effective like a flu shot, and we're gonna have to take it every year? Who knows? Data shows that for the last 70 years, September is a bad month for the stock market. And on top of all that, the US presidential election is almost here, and each president would push a different agenda. One president, for example, might favor expanding fossil fuel use, and another president may prefer to expand on new clean energy. All this together provides lots of volatility and uncertainty. The stock market hates uncertainty, and people are not buying, and some people are actually selling. While investors are being fearful, it resulted in companies going on the red and the companies becoming more affordable. When the market is green, you can make money in any company you pick, but today is not one of those days. As you see, everything is red. But the way I look at this is, when the market is red, I buy, because on a 30 years average, only 25% of the time the market is red. And 75% of the time the market will be green. I might not buy today, but maybe tomorrow. On a 30 years average, 75% of the time, the market's going up. And tomorrow I don't know if the market will go up or will keep on going down. My guess is the market will hold like this because we are still on September and in the middle of all this. It takes me hours making these videos, and I would really appreciate if you drop a like, and if you have not yet, subscribe and hit the bell. I invested $1,000 and I used M1 Finance. M1 Finance is an investing platform that supports fractional shares. So you don't have to buy the full share, you can buy a share and a half or anything if you so desire. As you see here, I'm $20 on profit, but on the bottom it says I'm $9 on the red. The reason for this is that I just signed up and I just finished buying and investing $1,000, and as the stock's going up and down, I did lose $9, but I did get $10 when I signed up, and I got another $20 when I referred a friend. If you would like to open this account, I'll leave my link on the description down below. You get $10 for using my link, but this month, only September 2020, you actually get $20. I invested a little over 80% in 4 stocks, about 20% or 200 into Tesla. The numbers have changed a bit because I didn't buy everything in one shot, but slowly throughout the month. I always try to buy more during the dips and buy less during the peaks. We can just do the best we can. We never know when we are at the top of the peak or on the bottom of the dip until we have passed it, and then you can look back and say, oh, that was the top, oh, that was the bottom. Tesla is an electric vehicle and clean energy company. Tesla makes electric cars, battery, energy storage, solar products, artificial intelligence, and others. Tesla is a car company, but they are so involved with technology and new tech that they are also seen as a technology company. The second company I picked to invest was Google, another about 20% or $200. Google owns YouTube and other companies. Everyone knows Google, it is a huge technology company. Google has even changed the dictionary. We used to say, let me search this or search that, but now we just say, let me Google it. Google PE is at 32. For a company this big and this important during the pandemic, in my opinion, a 32 PE is a sign to buy more of it. Leave your thoughts, if you agree or not, in the comment section down below. The third stock I picked was Amazon. Amazon focuses on e-commerce, cloud computing, digital streaming, and artificial intelligence. Amazon is one of the big 4 with Apple, Google, and Facebook. Thanks to Amazon, people who couldn't leave their homes during the pandemic were still able to order everything they needed and have it delivered to their doors. Very easy and convenient. Once we get used to something that makes our lives easier and more comfortable, we don't go back to the old way of doing things. Online buying and home delivery is a business that will keep on growing. And my fourth investment was on Netflix. Netflix is a technology and media service provider and a production company. Netflix disrupted the market, providing a much more affordable entertainment option than cable. Netflix is able to charge just a few bucks instead of hundreds like cable does. I find it also amazing how Netflix is able to produce movies and series with much lower budgets and very high quality. The only reason they are able to provide us good content at a much more affordable price is because they found ways to develop the content at more affordable prices than the competition. In my opinion, cable companies are almost a monopoly. They don't even compete with one another. If in my area I have one cable company, other cable companies do not provide service on this same area. And that is what allowed the cable companies to charge us whatever they desire. And the remaining almost 20%, almost 200 bucks, was invested in 4 other companies. These are the bottom 4 companies. About a little over 10% went to Snowflake. Snowflake is a cloud-based warehousing company. Snowflake has just become public and there was lots of talk and hype around it. And then I decided to invest on it. I had never before invested on a company that had just become public. Snowflake seems to have so much potential, so I decided to buy it. But it is not a big position anyway. Even if I get 100% profit, it just means right now it will go from 100 to 200. And the leftover almost 10% I split into 3 companies. The Chinese company Alibaba, the company held by Warren Buffett, Berkshire Hathaway, and Apple. This portfolio is almost entirely invested in the technology sector, so there is not a whole lot diversification. I feel these companies will keep on growing, but there is a lot of volatility around them at the moment. Maybe I would not have set up this portfolio with these exact companies if I had just started investing on this month. But I do feel very happy with this investment because I already hold too many blue chip companies in another portfolios. Blue chip companies have excellent reputation for quality, reliability, and the ability to operate during good or bad economical times. Companies with that great track record have been around for 30 years or 100 years, so they pay dividends. The dividend is a great thing, but they don't have space for massive growth anymore. Make sure to subscribe so we will see how this will turn out to be. Thank you so much for watching this video. Have a wonderful day.